AMD shares have rallied almost 200% since its lows around $76 in the April tariff drama. And there has been huge news in terms of AMD and other big AI companies. So in this video, I want to go through AMD, their financials, their business model, and then really dive into the news around this company and the potential that this company possesses for the future. Now, there's only a couple of things I need from you guys. That is to like this video and to subscribe to my channel if you're not already done so. And that helps me update you guys real time on any news events in the stock market, any stocks that you should be watching, any stocks that I think are great investments. Let's get straight into this very valuable video. Now, as AMD is an AI chip company, I thought it would be apt to use AI, Google Gemini, or AI overviews to understand its business segments and what their major products are. So here you can see I just typed in some search for this, and here you can see that their main revenue generators are their data center segment, their client segment, their gaming segment, and their embedded segment. So let's go through each one of these and explain the major products inside those. So data center is the biggest and largest and fastest growing segment of AMD's revenue generators. They're focusing on high performance computing, AI, and cloud markets. Obviously, this is going to be high margin and the fastest growing because of the AI narrative that's taking place around all of these companies. Their major products in this space are the EPYC processors, which are for servers, and CPUs for servers that are widely adopted by enterprise and cloud data centers. So that's a large addressable market because that growth is just soaring. Demand is strong due to their role in powering the growing AI infrastructure. And you know that this is going to be growing fast, not just by AI's numbers, but by what other companies, other AI hyperscalers, and other AI growth companies are saying. They need more compute. They are always talking about compute, energy for creating more compute and using more compute. So compute is probably the biggest metric, that the strongest and most important metric that you can look at for companies like AMD, because those are the customers. The customers are using tons and tons and tons of compute. And you'll see that later in some of my other points about this, that AMD is positioned very, very strongly. Their moat, even though they have high competition from NVIDIA, Qualcomm, and other things like Broadcom, all these companies, other chip manufacturers and designers are there. There's so much addressable market and so much demand here that I think they have a moat in just the business that they're in. So here you can see they also have Instinct GPUs, which are graphic processing units, AI accelerators specifically designed for generative AI and high performance computing workloads. MI300 series, the MI350 series launched in mid-2025, offers substantial performance improvements over the MI300X and is already ramping up for major customer deployments. So you see this with NVIDIA too, with their Blackwell chips. They announced it and demand backlog was out through the roof. So now AMD is getting that type of attention. MI400 series, the next generation of Instinct GPUs, is scheduled for release in 2026. So the thing about these chip manufacturers, they have to be designing the next wave of design chips, next wave of high performance chips that are beating the ones that they already put out. Because traditionally, these companies have been cyclical, so they have to build up on the demand and the performance of what they've already released. Other products include adaptive SoCs, FPGAs, and smart NICs. So they have a strong product line and future product line in the data center revenue segment. Then they have their client segment. This segment includes processors for desktop and notebook personal computers. Major products here are Ryzen CPUs, which are desktop and mobile processors for both consumer and commercial PCs. So these are for like retail consumers that you will buy going to, Best Buy and buying a computer or a laptop. Their CPUs may be in those products. And this is built on the Zen architecture. Ryzen AI processors. So they built out their own AI processors, which is a new category of processors with built-in AI acceleration for emerging PCs. And the Ryzen AI Max and Ryzen AI 300 series launched in 2025. So they're adapting and iterating very quickly because they have to stay on top of this AI narrative. They have to stay on top of this AI demand. Then they have their gaming segment, the RDNA 4 architecture. This is the basis for their new Radeon RX 9000 series graphics cards that launched in 2025. And then they have their semi-custom products, specialized system on chip. So SoC stands for System on Chip products, designed for major gaming consoles like Microsoft Xbox and Sony PlayStation. This is a smaller segment than the data center segment, but it's still important. It has been a traditional segment in AMD's earnings and revenues, so that is an important thing to note. And finally, they have the embedded segment. This offers integrated CPUs, GPUs, and adaptive system on chips for a wide range of industrial and enterprise applications. So I see this segment growing massively into the future as more robotics and semi-robotic systems are introduced into warehouses, into automation places where automation can take place. For example, like Amazon, where they have introduced a lot of robotics into their warehouses and manufacturing, stuff like that. This is going to be super important because these CPUs, GPUs, and other chips can go into those systems and provide a large amount of revenue to AMD. So major products here are adaptive SoCs and FPGAs. These products were largely inherited from this acquisition and serve diverse markets, including communication, aerospace, and industrial sectors. Embedded processors are also products used for devices that require moderate to high performance, with a focus on low power cost and small form factor. So I thought I'd bring this up because this is really important to understand, and I like how Gemini put this into a nice, easy to understand format. So you can see their revenue generating segments, and you can see the major products in those segments. Now let's go through their last earnings report. Let's go through this. I think it's important to understand their numbers and why those numbers are going to change so drastically going into the future. I've set their 3 segments. They put client and gaming together. So they have data center, client gaming, and embedded, and they show their products here. Now, they completed an acquisition of ZT Systems on March 31st, 2025, this year. And that brings together world-class silicon, software, and systems designed to deliver rack-scale AI solutions. So we're talking, this acquisition really helps their data center revenues, and that is the largest and fastest growing segment. So this is really poised to accelerate that segment even further and compete against the likes of NVIDIA, Qualcomm, and Avgo. So looking at the numbers, the revenue for Q2 2025, record second quarter revenue of $7.7 billion, increased 32% year over year, which is amazing growth to see. Revenue growth was driven by record sales of Ryzen and EPYC processors. And like I explained before, these are their servers and server processors, and higher semi-custom shipments. So you're seeing a 32% year over year growth here. Gross margins Q2 2025, you're seeing a drop here on GAAP and non-GAAP, but they explained this because of chip restrictions. So this is not related to their actual performance or actual operations. This is due to a decrease due to $800 million inventory and related charges associated with US export control restrictions. And this is on their Instinct MI308 products. Excluding this charge, non-GAAP gross margin would be in 54%. So this is due to external factors and not due to own internal operations. Operating income fell to $0.1 billion in Q2 2025. Non-GAAP also fell to $0.9 billion in Q2 2025. Declined due to inventory and related charges associated with US export control restrictions. Again, external to the company. Diluted earnings per share, Q2 2025. Even with that, they rose from $0.16 in Q2 2024 to $0.54 in Q2 2025. That is a huge increase in their GAAP diluted earnings, and their non-GAAP went down 69 cents to 48 cents. And that is because the $800 million inventory and related charges. If you added that 43 cents back to the 48 cents, you would have a huge beat on non-GAAP earnings, diluted earnings per share as well. So you have revenue, $7.685 billion in Q2 2025, gross profit $3.3 billion, gross margin 40%, but that should be way higher. Operating expenses were $3.193 billion, up 23%. Operating expense revenue percent was 42%, down 2 points. Operating income was a loss at 134, down 150%. Operating margin was negative 2%, down 7 percentage points. And these are because of the chip restrictions. Even with that, net income came in at $872 million versus $265 million, up 229%. The diluted earnings per share also came in at 54 cents versus 16 cents, which is up 238%. You see data center net revenue $3.24 billion, up 14%. Operating income loss was 155, which is down 121%. Client and gaming came in at $3.621 billion, up 69%. And since they added these together, it seems larger than the data center, but data center is the largest. If they split this up, it will be different. Operating income $767 million, up 362% year over year. Embedded net revenue was $824 million, down 4%. Operating income $275, and that's down 20%. So the client and gaming together, they posted strong gains. And if the data center chip restrictions were taken out, this would be a large gain as well. Balance sheet, cash and cash equivalents, end of Q2 2025 was $5 billion, almost $6 billion, which is down 20% because they're doing some reinvestments into the company. Accounts receivable net is $5 billion, down 6%. Inventories, $6.677 billion, up 4%, and total debt, it was $3.2 billion, down 23%. We had cash from operating activities of continuing operations of $1.5 billion, record free cash flow at $1.2 billion, which they can use to repurchase shares. They can reinvest into their business. They repurchased $478 million of common stock, lowered total debt to $3.2 billion with the repayment of $950 million of commercial paper used to finance the ZT Systems acquisition. As you can see, they're reporting strong year-over-year growth in these segments. And if it wasn't for this chip restrictions, which is go away, in my opinion, they would have reported really strong growth in the AI data center segment. Based on this, I'm very confident in AMD's numbers. External factors will be removed with that, and they're moving ahead without any interruptions. They're rolling out and developing their next product lines. I don't see any long-lasting impacts from their chip restrictions. So let's move on to their big elephant in the room, which is their OpenAI deal. And here you can see that AMD and OpenAI announced a strategic partnership to deploy 6 gigawatts of AMD GPUs. So this deal involves OpenAI to deploy 6 gigawatts of AMD GPUs based on a multi-year, multi-generation agreement. So initial 1 gigawatt OpenAI deployment of AMD Instinct MI450 series GPUs starting in the second half of 2026. Under this definitive agreement, OpenAI will work with AMD as a core strategic compute partner to drive large-scale deployments of AMD technology, starting with AMD Instinct MI450 series and rack-scale AI solutions, and extending to future generations. So AMD has issued OpenAI a warrant for up to 160 million shares of AMD common stock. Investing is further tied to AMD achieving certain share price targets and to OpenAI achieving the technical and commercial milestones required to enable AMD's deployments at scale. So what this basically means is that OpenAI is invested in the share price and the company of AMD. So OpenAI only gets certain tranches of shares if AMD share price reaches a certain amount. So OpenAI is literally invested into making AMD succeed, that's why this stock is flying and soaring through the roof right now. And some of the rumors say that the final tranche of shares have AMD share price needs to be at $600 per share, which is a 300% increase from here. So you can see why everybody and all these retail investors and institutional investors are so bullish on this company right now. And it's really a validation of AMD and their products and saying that they can too reach the heights of NVIDIA, who is their main competitor in this space. The deal is important, but it's also important to understand why is this needed. So I went on to OpenAI. They just had their dev day, and a couple of things were very important to me that stuck out. So they have 4 million developers who are building with OpenAI. They have 800 million weekly ChatGPT users. But the biggest thing here is they use 6 billion tokens per minute on the API platform. They need so much compute to offer this type and to scale like this. They need so much compute. Even Sam Altman was talking about needing more compute for the future, for future AI uses, for future AI deployments and developments. All of these companies, not just OpenAI, Meta, Google, Amazon, Microsoft, so many of these companies need more compute that addressable market is increasing into the future. AMD's potentials are very, very, very strong right now and only increasing. And I thought this was a very important point to make in determining AMD's valuation and fundamental valuation. Let's look a little bit more deeply into what this offers AMD. So here, AMD is establishing 6 gigawatts of computing capacity for OpenAI. AMD's data center business generates a little over $14 billion in annual sales now. That OpenAI deal will add double-digit billions of annual revenue to that segment once the first chips start to deploy in the second half of next year. She also cited the possibility of well over $100 billion in revenue over the next few years. AMD's market cap is $343 billion right now. That's with this huge jump up in stock price. So if you're adding $100 billion to this market cap will, I think, with the addition of that, will easily exceed $500 billion. And I think it's on track to exceed $1 trillion in market capitalization in the next coming few years. Now, what does this kind of news and numbers mean for analysts? So what analysts are seeing is they are increasing the price targets. Several of them have increased the price targets just after this news. Jefferies increased it from 170 to 300, Melius from 200 to 300, Barclays from 200 to 300, 185 to 275, 200 to 275, 200 to 275. You can see this is a massive increase from so many analysts. Like, this is insane. Let's get into the valuation in my stock analysis software and see what we're looking at here. So I've brought it up in my stock valuation software, and this software is going to be rolling out very soon. It's going to be part of my beardedinvestor.com software offerings. So stay tuned for that. You'll be able to get a membership through Patreon to get access to this. But let's go through the evaluation. So here you can see the PE ratio right now, the trailing 12-month PE ratio is 122 basically. But look at the forward PE. The forward PE is only 28.57x. So what does this mean? This means that the earnings are going to explode in this company. That's what analysts believe. And you saw that with the price target increases. They don't pay a dividend. The 1-year price target right now from analysts in this circumstance, average is 200. But as you saw, that's not really accurate because they have not priced in all these upgrades yet. So this is pretty much, it should go up about $100. I think it's closer to $300 right now. Let's look at their financials here. Revenue shooting up. And you have to remember that all of these are before the OpenAI deal. So you can see this is a nice increase based on the AI narrative. It's going up, up, up. Net income is a little unsteady, but I think they'll figure that out as these deals come in. EBITDA, same thing, is on a relative trajectory upwards. EPS going up. This is a extra data point. This should be up here at the end of 2025. Their balance sheet is very strong. Their shares outstanding is going up even though they're doing share buybacks. So that's something I would like to see their free cash flow explode with this new revenue that's going to come in. I want to see them reduce their share count. So that's one thing that I don't like about this. But they are doing share buybacks. It's just not enough to account for the shares going down. Free cash flow, you love to see positive free cash flow. So you see that here, and I expect this to go up in the future with the new revenues that are coming in. Dividend payouts, they did some dividends in the past years, but nothing now. And I mentioned share buybacks. So based on just the numbers right now, I'm getting a fair value of $300 per share. What do I anticipate in 2027 and onwards? I'm thinking with this revenue generation, it could go to 40% in a very bullish case. In a very bullish case, I see this going to 40%. So let's say 40% across the board here. And that puts you close to $600 per share, which is 173% above this value. Now let's look at the multiple of earnings. Here in 2026, analysts are estimating 55.2% net income growth. I would say let's keep it around 50%. And with the 50% net income growth, with a PE, let's say 35, I think 35 is valid and maybe even conservative on this company right now. Because semiconductor companies and big tech companies have a higher PE, higher standard PE. They do a 35 PE across these years. You get 213 right now in 2026, 2027, 319, 2028, 478, and 2029 of 719. So in 4 to 5 years, you're seeing this company at $600 to $700 per share, which is an amazing return on your money. Like I said, the analyst estimate has not been updated. I think this is closer to $300 per share based on 52 analysts. And I really want to look at this price to earnings ratio because right now it's 122x, but I think that's going to come down dramatically over the next 2 years. And what have they been traditionally? For the most part, they've been over 30x in their PE. So you have to imagine that if their PE is going to come down to 28x, that gives analysts room to raise the multiple as well, which will increase the stock price again. Earnings and revenue will be anticipated to grow. EPS forecast, I believe they're going to beat on EPS going into the future. And their revenue breakdown here, they have a very small general and administrative expense. Research development, $8 billion. That goes primarily into chip development, their next generation of chips. So that's understandable. And sales and marketing at $4 billion. Earnings at $3 billion, but I believe the net income, the bottom line will increase in the years ahead while they become more efficient and get way more revenue, way more top line coming in through the door. Shares outstanding are going up. They are doing share buybacks, but I would love to see a decline in the shares outstanding, and that will just supercharge this stock in the future. So overall, it's poised to do really well into the future, into 2029 and 2030. I think it could be $600, $700 based on the news, the confirmed news, and just the trend of AI going forward into the future. So what have I done? I have started a tracker position into this company, a few $100s into this company so far, and my Patreon members can see those moves in detail. Going forward, I am going to DCA into this company. I'm looking for pullbacks, any pullbacks that I can. There was a fair value gap in the chart after that huge explosive 25-30% up move yesterday. So if it can fill that gap, I will be buying heavily in the 170s or 180s level if it fills that gap. That's what I'm doing, guys. And if you like this content, please like and subscribe to my channel if you haven't. And I will see you guys in the next one.